January 2, 1996. The Real Estate Capital Scoreboard January 1996. Once again, rates dropped by about 1/8% since the end of last year. The lending community is allocating funds for 1996 in much more aggressive levels than in the past few years. All indications are for another record year of funding. Mortgage spreads over comparable term treasuries remain identical to the fourth quarter of 1995, with the best pricing starting at 100 basis points and increasing to as much as 350 basis points.
February 1, 1996. The Real Estate Capital Scoreboard February 1996. Mortgage interest rates are trending upward as are spreads over treasuries. Fixed-rate mortgages start at 6.5% for 5-year term loans and about 0.25% more for 10-year fundings. The best spreads over treasuries start at 100 basis points, while most loans are sized at 150 basis points to 200 basis points. Entrepreneurial properties peak as much as 350 basis points over treasuries. As for equities, heated competition for investment-grade multifamily and income properties results in tightening capitalization rates starting at 7%. Premium quality institutional assets are selling based on overall yield of 10% to 12% on an unleveraged basis and as much as 20% on the leveraged basis, assuming a 7 to 10-year holding period. March 1, 1996. The Real Estate Capital Scoreboard March 1996. Throughout February, rate volatility was as much as 0.5%. In contrast to January, rates have increased between 0.3% to 0.5%. This is the most significant movement in the past half year. And while treasuries have increased, mortgage rates still remain relatively competitive. Current rates for fixed-rate permanent loans start at 6.75% for 5 years and 7.125% for 10 years. Cap rate for conventional property types remain unchanged. April 1, 1996. The Real Estate Capital Scoreboard April 1996. Rates jumped in March, increasing by as much as 60 basis points, creating anxiety in the capital marketplace. Yet rates have recently declined by 25 basis points or more, producing more optimism. As expected, real estate capital is quite abundant. However, lenders are seeking credit deals and offering considerably more attractive underwriting terms. May 1, 1996. The Real Estate Capital Scoreboard May 1996. Rate range in the second quarter is starting at 7.25% to as much as 11%, depending upon the property type. This pricing translates to spreads of 100 basis points or more, similar to most of last year. Spreads of more than 100 basis points differentiate multifamily and net lease assets from typical income-producing real estate. Overall yields for equity deals, internal rate of return, remain unchanged at 10% to 15% for institutional-grade assets. June 1, 1996 The Real Estate Capital Scoreboard June, 1996. U.S. Treasuries fluctuated as much as 50 basis points, settling about 10 basis points more than the previous month. Generally speaking, Treasury rates over the past 12 months show a downward cycle after peaking in the second quarter of this year. Spreads over comparable term Treasuries are about 25 to 30 basis points more than earlier in the year, starting at 130 basis points to as much as 400 basis points. Overall permanent mortgage rates start at 7.4% for 5-year debt, and nearly 7.75% for 10-year funds. Capitalization rates start at 7% for multifamily deals and range as much as 9% or more for lodging facilities. These pricing dynamics remain relatively unchanged throughout the year. July 1, 1996 The Real Estate Capital Scoreboard July, 1996. Short-term mortgage rates increased by nearly 30 basis points, starting at 7.75%, and long-term rates are at approximately 8%. While mortgage rates climbed, overall equity yields remain in the 10% or greater range, and capitalization rates also remain unchanged. Monthly activity indicates that rates have increased by about 25 basis points. The 5- and 10-year funds remain the most volatile, while 7-year treasuries are somewhat steady. Although rates have climbed, many lenders are lowering rents in an effort to finance a greater range of properties. The net result translates to mortgage rates holding steady despite more volatility in the treasury markets. August 1, 1996 The Real Estate Capital Scoreboard August, 1996. Gyrating rates mirrored the up and down stock market behavior of July. By the end of the month rates rallied, settling 0.25% lower and continued to drop into August. Debt funds availability is high and financing options abundant. Permanent fixed-rate loans start at 7.5%. Equity markets are also very strongly performing. Capitalization rates start at 7% for multifamily and 8.5% for most types of commercial properties. Developers are now discussing spec office projects due to a shortage of larger blocks of high-quality space, 100,000 feet squared, in many suburban markets. September 1, 1996 The Real Estate Capital Scoreboard September, 1996. Interest rates declined during the first half of the month, but steadily rose and peaked by the end. Inflation fears and healthy housing starts are the two main culprits within the bond market. The net result is virtually no change in rates since August. The supply of money is still at peak levels as lenders aggressively seek new funding opportunities. Also, conduit pricing is approaching below 200 basis point levels for high-quality multifamily fundings.
October 1, 1996. The Real Estate Capital Scoreboard. October 1996. Rates remain almost unchanged since Labor Day and are trending downward. Nevertheless, September was a volatile month as rates increased over 0.25% and dropped again. Since the year-end is approaching, expect more lending volume as investors seek to complete 1996 funding objectives. That said, timing is very favorable for obtaining most types of financings. New construction for multifamily, industrial and retail properties prevents rapid price appreciation of existing inventory. Hotels and office buildings are still available at pricing below replacement costs. Also, this month marks a change in ranking as investors favor office products over retail. General IRR yields range from 10% to 15%, but an IRR yield of 15% plus is not uncommon on a highly leveraged basis. Initial cap rates generally range from 7% plus for apartments, 8.5% for net leased and Class A industrials, and 9% plus for most other income property types. November 1, 1996. The Real Estate Capital Scoreboard. November 1996. October ended favorably with interest rates trending downward. Rates dropped more than 0.25 point since the beginning of fall. Rates start at 7.25% and 7.5% for fixed-rate permanent loans based on 5 and 10-year terms, respectively. Since current mortgage rates are near earlier historically low levels, expect some delays in funding as lenders scramble to close by year-end. Also, election politics should keep rates on a steady course in the near term.